we spend a year building what you will see today. Today we are very excited because it's our first webinar, no pressure. We will get something wrong, I'm sure, but we'll have a lot of fun. Second, we show you is the first time we show publicly a private equity module. And then it's very, very important because you will have the opportunity to play with the platform later on. So why private equity, right? Some of you have heard me, I've heard Florian talk about credit and that and the other. That's the long-term direction. But we have a client in China that asked us to build a private equity module, and we are going live in the next couple of months. So today, we are very, very excited. I mean, you can hear in my voice, can hear in my body language. You know, it's natural for me. By the way, I'm a natural athlete. This is water, right? And we are very excited to show you exactly what the platform does. I will pass it over now to Florian to take you through some of our slides. Please.
Thank you very much, Alex. And for everyone who doesn't know Alex, that's his normal natural state.
Yes.
What you can also see is, yes, indeed, we have been actually from the beginning a remote first team. So we also have some of our colleagues on the call to then later discuss your questions. But before we get to that, let's actually start with the first agenda point. Just a very high level view on what we see in the markets, what we observe, what the conversations are that we're having in private markets sector that we focus on, as Alex mentioned. This is just as a sort of as a reminder, I'm assuming all of us are at least roughly familiar with this market. $6 trillion in assets under management has been growing quite nicely over the last years, with 8% on average year on year, closer to 10% in Asia. And the same growth we've seen in the number of transactions. Probably the latest numbers are closer to 20,000 transactions a year, around $300 billion in volume overall. And a very interesting number, it's around $12 billion in transaction costs in total in this industry. So still quite overhead heavy, expensive to transact in private markets. On a very high level, so if we look at it from a macro perspective and forget for a moment the situation that we're all in and now globally are in, we think that the long-term drivers are still very much intact. We'll continue to see institutions looking to invest their cash reserves. As of end of 2019, the latest numbers are around $2 trillion are now available in dry powder, which means capital committed and not yet invested. And that cash pile is continuing to grow, with a second driver, with a continuance of emergence of private wealth of family offices. Again, we see that especially here in the region. And finally, there's also the other side of it. There is the demand side, if you will, on the capital level. That's companies, projects that are looking for risk capital. And in any innovation-driven growing economy, that is a backbone to move to that level. That's a transition certainly that we're observing with China, developing into an innovation-driven, deep technology-driven economy, and that requires effective capital markets and risk capital markets. So that's on a high level of what the picture looks like, and that for us, for the foreseeable future, will not change from a macro perspective. What I want to do, though, is in three bullets also cover a bit in more detail and double click on what I just said. In what's the situation now, and how do the markets change, and what do people expect looking forward? And the first one on that front is the sector itself and how it's going to evolve. So if we summarize that in a few high-level points, again, what we take away from our conversation is looking forward, we definitely see a general reduction in deal making and also in exits. That's just a normal correlation with economic health and the situation that we're in, and then very likely that we are at the top end of the last economic cycle. And the second main thing is that debt financing will be much harder to come by. So we see deleveraging of deals, which probably is necessary at 6 times EBITDA multiples that we're looking at or have looked at in 2019, and it's like a normalization that people expect. One thing to note on that first point is also that very likely the effects won't be as bad as during the last crisis, 2008, 2009, where it started. And it's an opportunity for the sector to prove that it's actually robust and counter-cyclical in the times that we're entering. Second major point, if you look at the markets in general, is we probably see a marked reduction in LP commitments to the funds, to VC and PE funds, but also to debt funds most likely. And that's a knock-on effect of generally falling asset prices. And what's also interesting and quite logical as well is that institutions will strive to maintain their preferred balance between public and private assets. So if you have public markets falling like they have, your balance is out of whack, and so you're reducing commitments. Again, on the bright side, probably it's not going to be as bad as we've seen in the last crisis, because most LPs are still underallocated to private markets relative to their goals, and so it might not be as severe. That's the good side of it. 2 more points. One is certainly a shift in the asset types and the deals that we're seeing. More focus on sustainable growth, on profit, and that's something that we've seen already, let's say, the second half of last year, certainly accelerated. And also in the nature of the times that we're in, more investment into distressed assets and special situations deals. It's just the opportunities that are out there in the market, and the hunt for value, we'll see much more of that. Final point, which goes a little bit back to what we're doing. Very clearly what we're seeing is, where's the focus of the players in the market? No one used to worry a lot about efficiency, for example, about even data standardization, about security, cybersecurity. It was not top of the agenda. It's gradually moving up there because the industry sees, okay, the times are changing, and we also have to look into efficiencies, improving our processes. That's one thing that will keep us competitive. And naturally, that's one of the theses that we're also building on as a company and as a platform called CrossPool. Second main point, and I promise I won't go as long on that point as I did on the first one. A bit shifting to the region. Yes, everybody's bleeding. It's a tough time for everyone. It's a structural topic that we're seeing. It's hard times, especially for projects in the context of blockchain, which tends to be more exotic within institutions. But on the bright side, especially for Greater China, we slowly see things coming back online. We see projects coming back online. And this is why, for us, for this specific topic, Asia remains an attractive region where we believe we see a similar type of leapfrogging in terms of capital markets infrastructure as we've seen in the payment sector. And this is where blockchain will play at least some role. If you remember the comments by President Xi Jinping, it's likely that also politically there will be an agenda to upgrade infrastructure and capital markets, and we do see that coming back already, where probably the rest of the world is just entering more difficult economic times. Certainly, China tries to push and try to bring back the economy as much as possible. On the last point, and Alex, I will ask you here to jump in. It's more on, so what do we see in client conversations? Which types of clients are we talking to? To me, it's still what's called the lunatic fringe. When you think about the crossing the chasm model, it's very early stage still, and it's mostly plays in alternative real assets that are basically ready to go live and want to do something tomorrow. At least that's what arrives on our end. The institutions, we have all the conversations, but it will take time for those projects to really go live and for institutions to dive into that deeper. Alex, do you have any comments on that last point?
Yeah, no, yes. So, and it's very interesting what you said, that we're still talking about risk and cost cutting which is why I fell in love 5 years ago with blockchain. If you remember, and that's something that we joke internally. I set up a blockchain consultancy in 2015, right? So I had no clue. I went in and I got beat up by the market because it was really, really early days. And so what I've seen as well very quickly is that back in the days, it was, what are you talking about, Alex? Is it Bitcoin? Then it became, oh, that blockchain. Yeah, I know about it. I've heard. It's something to do with cryptocurrency. Then we went 2-3 years ago around, permission or permissionless. And then we started to talk about cutting costs and cutting risk. I think in the last 18 months, we only started, that's my bias, by the way, that's what I've seen. And I talk to hundred of people sometime per week. No, a dozen per week. I wish I would. But the fact that we're talking about new business model, new channel distribution, and the lunatic fringe, which is what interests me, right? Because I spent 16, 17 years in banking. So these things are very, very interesting to me. Energy, and there's a dimension with ESG, seafood, movies, wine, collectibles. We have a strong pipeline in that space. And what is very interesting is that because we position ourselves as a market infrastructure as a service, it's already built, it's cross assets, right? We're moving into the client application layer with these partners. And these partners are very interesting to me because they have supply and demand. Very, very quickly, most of my conversations with institutions end up where, oh, but can you bring clients? Oh, I don't know who to talk to. And because we are not a licensed institution, we can't have this conversation. In the real assets, that's where we can move very, very fast. Back to you, my friend.
All right, thanks for the update, Alex. Let's move on to the platform, which is what we're here for. And this is why we powered through sort of the general update. If you have any questions, a friendly reminder, please drop a nice note to Connie, who will manage the AMA section towards the end. So CrossPool is the tech platform that we built, a digital platform for private markets, as Alex said, cross assets. So we build it generically. Cross assets, and then we see, where's there's a push and pull, which direction is the market pulling in, and what is strategically our direction. As just mentioned by Alex, there is some interesting dynamics as to what moves faster, what moves more slowly. On a very high level, what we'll be walking through today, which you will see in the screens, is an end-to-end investment process generically for private market assets. Today we'll look at the private equity workflow from onboarding, bringing clients on board, identifying them, creating their identity, and we use Hyperledger in the blockchain for that part. Really transversal through the entire process, where each identity has certain rights. So the schema is defined in a way so that we can have very finely granular controls over who can see what, who can do what. And this is where one part of blockchain is quite useful and a good application, we believe. The second step is the structuring and issuance of the asset itself. So for example, of private equity shares and everything that's involved there. Then these assets can be published to a marketplace and can be presented to potential counterparties. And the next step that follows is transactions, and that's primary and secondary. We look at the primary workflow today. We did build also secondary trading capability. I may mention some details on that when we look at the live application, but that's the idea, right? So why move to a digital process and use digital assets? One reason is to allow easier transfers and transfer in parts of certain assets, so fractional ownership down the line, and allow automation of process steps along that. So secondary transactions is an important part of that. Finally, asset servicing. Yes, that sounds a little bit boring, but we all know there's a lot of work and a lot of cost. A lot of the 12 billion in costs comes from asset servicing, where anyone who works in the industry knows there is still this amazing system called Excel, where billions of assets are managed on, not very secure, probably not very purpose-built. Bank transactions are still done manually to a large degree if you think about distributions or coupon payments on debt instruments. So what we mean by asset servicing is everything that's attached to the asset that happens further downstream, which distributions, corporate actions, valuations, managing the data around it. And then if you think about it in practice, that could be something like I'm updating my shareholders. You know, if you think about investor relations for startups, it's in most cases a mess. You know, you use a shared folder, you use a Google Drive or Dropbox, or you send a PDF in an email, or what is it? So even those very practical aspects are part of asset servicing, where if you lift all of that in one standardized workflow, first of all, it gets much easier. You don't have as much work. And second, it's much more controlled and secure, and also easier to navigate for your investors. So that's the workflow that we're looking at. And we go through that live today. We start with the issuance, actually, assuming that the parties on the platform, you know, they applied, they were identified, and they have an account. And we go through that live. I'm going to spend 15 seconds on this. If you have questions on the tech, please raise it. We have tech guys on the call. And the 15 seconds start now. There's two parts to the platform in terms of very high level architecture. We have the CrossPool base layer, which you can think about almost like a general infrastructure with general functionality. And that includes the two blockchains that we are combining in our distributed ledger infrastructure. That's R3 Corda, and I mentioned Hyperledger Indy. So we use Corda for the assets themselves and transactions, roughly speaking, and we use Indy for identity, roughly speaking, and we're combining the two together. Second side is the CrossPool client application. Why did we separate that out? Two reasons. One is customization. So we're able to very flexibly in an agile manner adjust or adapt the application to the specific use case, right? If you think about private markets, private equity, private debt, and then real assets, those may work very differently, also even depending on the specific asset class in terms of how that process works, and we need to be able to adjust it and adapt it quickly. And the second reason is if you're in institutions, you're probably more comfortable managing this application yourself, maybe even hosting it in your own data center, probably depending also on your size, what your preferences are, or having it run in your cloud. And this is what is possible with the client application. It's basically agnostic to how it is deployed. And that makes it easier for institutions to say, okay, so my transaction data, my user data, it's all on my application that I control. So FinFabric, no one has access to that. More technical questions, please later. With that, I think we're still okay on time. William, can we maybe cover, because we do have extra time, the issuance process so that we can see how does the platform look like from the perspective of someone who brings an asset on the platform? Because I will then continue and show you guys how does it look like from an investor's perspective. Are you here, William?
Yes, Warren. Here. Yes,
let's do it.
Hear you clear. And yeah, I'm going to show the admin suite for our multi-asset platform. So let me switch over and take control. So here we are. So it's we're gonna start. So this is our main interface, and we can log on using a password, username, and what we will see here is we can create the token that we use to digitize the asset. We'll give it a symbol and also the quantity and a short description for it. And next up, we're going to upload a few important documents. So we're going to upload the information pack from that we have created with the team and the legal team. and Florian will show you more later on. And we're also gonna next upload the contract. So this contract, the issuer will work with the legal team to come up with the contract. And what we have implemented here is a Ricardian contract. And on the Ricardian contract, I want to give a bit more information because it's different from a smart contract that we all know. A smart contract is a software code written to be executed on a blockchain network so that it can execute the contract terms. And what Ricardian contract itself is also a digital contract, also executable on the blockchain. But what makes it unique and different is that at the same time, it is available as a human readable text. So in the later example, Florian will show you that you can actually read our Ricardian contract as a PDF. And also lastly, for our current private equity platform on the admin side, the default setting is that we have set the trading permission to be on default just for a primary placement, and we can choose in the suite that whether you can do primary only or primary and secondary market. And yeah, that's all on the admin side.
Okay, cool. Short and sweet. There's of course a lot more there. Again, probably for another session if you're very interested in the admin side and how these tokens get created on the back. This is mostly using R3 Corda to create the tokens or the initial token supply.
Sorry, may I
yes,
say
Alex.
quickly, may I say quickly something, because a lot of people, you know, when we demonstrate the full capability on our issuance, contract management, and identity management, we have interesting parties that want to use our issuance module. So if you're interested, reach out. It's what we've built. It's second to none.
Okay, so basically we're switching your perspective now to someone that's an investor. And what I want to do is I want to use the process to also explain a bit what's going on in the back. So if you go to the CrossPool application, what we built here on the front end is pretty lightweight, as you can see. That's deliberately so. We want to be the showcase to be easy and straightforward. And then depending on the institution, their workflow will be different. The front end will look differently. Alex mentioned our Chinese client. They had a very specific idea on how the front end will look like and what we will implement for them. So keep in mind, this is sort of a demo environment, although it's all live and you can go check it out and give it a ride later, or even now while we're going through this, we can go through it together. And you can make an investment into our example company, FinFabric. So it's the two areas we mentioned earlier, the primary and the secondary. So on this platform, we call it invest and trade. If you run through the investment process, as mentioned earlier, it's more or less the steps that I showed on the slide. Maybe to highlight a few more details, because then what we see later will make a bit more sense. Obviously, the investor will browse projects once they are published. And then they would commit to an investment amount and sign a digital contract. So it's not a digital applied signature or something like that that you would have from DocuSign or something, some application in that field. It's actually a cryptographic signature. So going back to what William just said, thanks, William. It's a Ricardian contract that combines these two sides, and we'll see in 2-3 minutes how that looks like. Then the next important thing is the shares, or whatever the units are that are being invested in, are held in a technical escrow. And this is while investors identify themselves, maybe they haven't been KYC'd yet, or why a payment is being settled or payment is being received by the seller, in this case, FinFabric as a company. Company receives payment, and then settlement happens with the tokens, technically speaking, or the shares being released to the investor. So the system is also built to reduce this kind of settlement risk that you would have in transactions, and that's especially important in secondary market transactions. So a quick glance on the secondary side, although that will not be the focus of what we look at today. As I mentioned, we built that functionality in the back. You can see two of the assets that we have already issued on the platform. The first one is an equity participation right in an indie movie. We're quite proud of it to have contributed a little to actually finishing this movie, because it just won 2 César Awards in France. Yeah. And it's great. It has an impact in the world. It makes you feel good. The second asset is a secured loan, more down to earth, a secured loan of a Hong Kong machinery rental company that's active in the local construction market. So as you can see, we tested, because these are pilot assets. Those were not done on a huge scale or with many investors, but they were done, properly structured and live end-to-end proper investors. And we tested both an equity type and a debt type instrument. So, if we assume that these assets were available for trading, it would start in a similar way, with one difference: the shareholders or investors, they could indicate the interest to either sell or buy. So we borrowed a bit from traditional capital markets. And for some of you, if you're familiar with FX, OTC trading, there's an IOI type process where I can indicate my interest either to buy or sell. And we implemented a similar function for that. The next step is, if both sides say, okay, let's look into this, let's engage, you would enter a secure private so-called request for quote RFQ session, where we can interact in a structured manner around the amounts, for example, involved, until we arrive at the deal. And then it would follow very similar processes in the clearing and settlement that I just explained above. I'm covering that also to show that, we thought specifically also already about the secondary process, knowing though that, this will take time to be a reality, and for the industry to move to also a more digital level in terms of secondary transactions. If you think about, if I want to carve out or to sell a part of a private credit instrument, it's extremely overhead heavy, lawyers involved, lawyer costs involved, takes a long time. How do I find a counterparty? So it's very hard to actively manage your risk in a private market portfolio, especially, for example, around debt. And in the coming cycle, especially when we talk about debt, the ability to more actively manage your private credit portfolio will be more important. There will be a premium on that, and that will drive digital adoption. Of course, we know it will take time. So if you go back to this, actually, let me sign in quickly so I can go through this process. Let's say I'm interested in this amazing company called FinFabric. As you can see, we already did some deals. So this is live. So if you put your credit card on the application, be prepared to receive some shares of FinFabric, and ask us some questions before you take that decision. So basically, the next step for me is to look at the company, the asset, in this case, a company FinFabric, and the shares in the asset, some general information, some information around the instrument itself, the symbol, the issuer, and then a level of, you could say, data room, where more detailed information is shared in stages. So what we're working on, not live yet, is to be able to give very granular permission depending on where the process is with the investor. Again, going back to the identity on Indy, so blockchain controlled, so that I can first look at more high-level information, and then as the issuer, in this case the company, allows me to, I can see more detailed and more private information around the company to take an informed decision. To shortcut here, if I say, okay, I want to invest, I took my decision, we will go over here to that investment window, very simple. You see here, we created something called investment units, and probably it's better for me to explain that when we look at the contract. In this case, I'll say I want 10 investment units, a $100, which forms the equivalent of $1,000. And now I would start a transaction. And so we enter into a secure private transaction, which I just initiated. So here on the left, you can see the progress of that transaction and how that goes, how that progresses. And on the right, on the bottom here, I can follow on, okay, what are the steps involved and what still needs to happen for this transaction to be concluded. I have some information here on the right around the units, the price, the transaction ID. That's important also for enforceability in case we disagree on something. All of that is recorded with an audit trail on blockchain, and it has a lot to do with enforceability. What we do is we generate the recording contract that William explained earlier on the fly. So if I take a look at that now, the system, it's the system, no one else. So it's private. It's only the company and me that can see this because the system is generating all of this. It generates a draft contract based on the information that it has. It's my name. I have a DID, a digital identity on India on the platform. And then there are some fields that are not decided yet, like, okay, so when do I have to make payment? Well, we don't know yet because we didn't sign anything yet. Basic terms, the units here, I can scroll through the terms. So if we skip ahead and don't read this for now to the signature page. So it looks slightly different, right? From, let's say, a wet signature on paper or even a DocuSign document. First, you can see here we have a DID public key. So that's basically identifying the company as a party, as a counterparty, and in this case, the director representing the company. So we both have to have a DID on a platform to go through that process. And then sort of myself as the person applying to buy a unit, and that's called the unit holder in the contract. Nothing is signed yet. We don't have a date of signature, but you can see our identities, my public key. So it's all clearly identified. Now, one thing I forgot earlier, so allow me to scroll back up. The contract type that we're using here is called a SAFE, so a simple agreement for future equity, which is not directly equity, as you know, but is a so-called deferred equity agreement. So it's a legal contract that later converts into shares at the conditions that we agree in this contract. For example, the next equity financing round. And one special element that we created on a legal side for this SAFE instrument is the investment units that you've seen earlier. So in a traditional SAFE, what it says is literally just $1,000. Someone invests $1,000. But if you think about the ability to transact in the future, we can't rip up the original SAFE and then write small SAFEs so I can sell 2 of my 10 shares or 2 of my 10 SAFE units. You can't do that. So what we're creating is 10 units, and each unit technically is a token that holds the same legal rights. So that's an important legal consideration that we've spent some time on getting this right, and is the basis for transactions in the future. So let's say I agree to all that, I signed a contract. What's happening is that my shares, my tokens go into the escrow that we mentioned earlier. And I've seen, yes, despite sort of time, a quick one that I'm asking Lawrence, are you still on? I've seen there were some questions around escrow and what that actually means. Can you explain the concept of technical escrow and what actually happens at that step specifically? Lawrence, I think you're on mute.
You see that's live.
No, I think his microphone is not working. Okay. We can get back to that later. I've seen there were a number of questions. Let's cover that later, Lawrence, while you fix your microphone. So let's go to, we verify, the next step is, there could be a step where I still need to verify my identity. So we backloaded that step. And that can be an automated KYC process where KYC system plugs in and is doing that automated. Could be a more traditional, more manual process where, again, the system will check on Indy, is this person KYC'd and does it have the right to take these steps accordingly? And then second thing is payment. So for me as an investor, I have to make a payment. Again, we spent some time on developing this, getting this right, and having multiple or as many forms of payment as possible. We first built bank transactions because that's still one of the preferred ways of effecting payment. So I just get the basic payment information. I can enter my payment reference number to go to the next step. What we've also looked into and started building is an integration with Swift GPS via Corda Settler. And that would allow us to automate some of the steps, especially the listening for, what is the status of that transaction. And once it hits the bank account, the rest of the settlement process would conclude. Today, I want to show the card paying process that we just recently finished, because if you go through this digital process, there is also a potential to have much smaller investment units, and a lot of people would maybe prefer to just quickly put that on their credit card. Entering my information here.
Thank you for investing, by the way. I appreciate it.
You're welcome, Alex.
Thank you.
Okay, let me just check. Yes, it should be okay. That, by the way, from a technical perspective, is a Stripe integration. Works very well. We tested it in all sorts of ways, tried to break it. Works fine. So now what's happening is that the admin person of FinFabric side, they will receive that information, and they have to confirm actually that they received payment into the account with Stripe. So while we do that, so while someone on our side is sort of getting that done, we can actually look at the signed contract. So it's an evolved version of the draft that we saw earlier with all the information filled in that was not there before. For example, the exact latest date, time of payment, and then of course our signatures. And just want to show you it's a digital signature, and how that works is that we are combining the public-private keys of the parties involved plus the hash of the contract itself, so that it is clear and provable that this was the exact file that was signed by both parties, viewed and signed by both parties, again, to have this audit trail and enforceability in the future. I'm just realizing, okay, no, that's fine. And you see it's also the digital signature now of me as the unit holder. So basically we signed the contract, and that triggered of everything to go into escrow. So in the meanwhile, while I'm waiting and while the company is reviewing payment, I can go out, browse around, and I can go back and to look into my transactions. So you see that I did a bunch of transactions. We did some tests on the live system as well. What I can see on this latest transaction is actually settled, which means someone actually approved it. So let's look into it. I can see that that FinFabric confirmed receipt of the payment on the system, on their side of the system, and the shares, or in this case, the safe units, were transferred from escrow to me, to Florian. So I want to give it another try. Lawrence, if you're still around, to explain a bit more around what we mean with the escrow account. If you're not here, then maybe we do that later in the AMA. What we see on the right-hand side. Oh, yes, he's back.
Oh, finally.
Yes, tell us about the escrow. We had some questions on the chats.
Oh, okay. So the escrow account is just an account on the Corda ledger. So we use the DID as the account name. And what happens in the transaction is that when a sender sends some tokens through a transaction, we put the token in an escrow account, which is just a system account, while the seller is waiting for the payment to be settled.
Right. So again, a step to reduce settlement risk. What's happening actually, if there is a problem with payment, or if the time that we saw in the contract, the latest time where payment needs to happen, if all of that fails, the assets actually go back to me as an issuer. So if there is a problem, the escrow will send the assets back to me and reverse the payment, so that both sides can feel safe and sure about the transaction itself.
And I want to add two important things. So right now we're talking about a technical escrow. We are having partners that we are onboarding as a real node. So they can be TAs, trustees, fund admin, number one. Number two, what is very, very critical as well in the transaction. So as a human, I will think is real time, right? When I pay and I receive the digital assets, it's real time. But the beauty about our system is that we put a permissioning level whereby the seller or myself can put an expiry, right? So imagine I'm in the US, Florian will give me a day to conclude. So that could be T+1. But I'm here and he wants to sell his asset really, really fast, and he will give me 2 hours, 3 hours, 4 hours. Why? Because he sees other opportunities, he sees other indication of interest that wants to buy his assets. So he gives me 2 hours to get my fund in order. If I fail to pay within that timelines that he set up, then the digital assets, the tokens go back to him. And that's the beauty about, so there's no settlement risk, there's no DVP risk. It's all tip top and beautiful.
Thank you, Alex.
So if I could
yes.
expand a bit more on William's comment about the recording contract. Let me just spend a few minutes on describing the mechanism of
Make it 3.
Of issuing a digital contract. Thanks, Florian. So to us, the issuance of anything is literally just a contract between the issuer and an investor. So the first thing you have to do is describe the contract. That means you have to model the way that legal contracts are done. So you have to write some prose that the issuer will commit himself to manage this particular instrument, and he will redeem the instrument when you come up with the unit or the token. So the recording contract is basically a document that captured all the legal prose. It has a bit of markup language that allows you to parameterize the contract as well. So when we looked at the PDF contract earlier, the blue values are inserted into the placeholders. But apart from that, you've got a boilerplate document. So once you've the document that describes the instrument, you have to represent it digitally on the system and on internet. And this is where you swap the domain. So here we have the blockchain system is sort of an accounting system which accounts for the units of this contract. You have an accounting system says, for example, we create 1,000 units of this thing. So you go into the database and you magically create 1,000 of these. And so you transfer from one account, that balance goes down and it goes into this other account, which goes up. So it's just the basic double entry bookkeeping in accounting terms. Now, this asset or liability, whichever way you see it, we can now carve them up and send them bit by bit to anyone. So the account system just manage the units. Now, the problem is the account system is good at numbers, but it doesn't understand what is moving around. It could be, in our case, shares or future shares of FinFabric. It could be US dollar, it could be a bond, a building, an airplane, and it's all the same to the system. So you have to find a way that links the contract claim that you make with the accounting, and that's where cryptography shows us how to do it. We take the document, the PDF document, we hashed it. We took the cryptographic message digest, and it's a big long string, about 64 bytes, and we used the SHA-256 hash, and that became the unit that was accounted for in the accounting system. So the system no longer cared what it's dealing with. All it had to do was keep the numbers good, balanced, and fair. And every time it moved a number around, it would be moving a number of these hashes. So what we have done is we've elegantly sliced the world of law from the world of accounting. And the fantastic thing about that is, even though they were entirely sliced, the lawyers didn't need to know any accounting whatsoever, and the accountants didn't need to know any law whatsoever. but they were logically coupled such that you can never get confused about what the value that it's traded was. And that is the recording contract. The notion of the document then hashed and then accounted for as a hash brought the whole thing together and made it end-to-end secure.
Can you repeat, because I didn't take any notes?
So, but I have to say, you know, that's the beauty of you know, working in a startup in general. You're working with amazing people that are passionate about things where other people would say, "What are you talking about? Like, this is the most boring thing in the world." But we are all passionate about this together and trying to you know, build the best-in-class solutions. So thanks, Lawrence, for walking us through it. You were probably talking to some of your own sort of micro audience that's following along, but it's probably preempting some of the questions. So that's very good. With having said that, I actually want to switch back to Connie.
Yeah.
I saw that we have tons of questions, so let's spend at least some time on that and answer some of the more pressing issues that we've seen coming up.
Not fight on who's going to answer, please, guys. Connie, we can't hear you.
Great. I just unmuted myself. Okay, let me go through some of the questions I received here and also offline in advance. So the first questions, what does the due diligence process look like for interested asset issuer?
All right, so maybe I can take it. So number one, don't forget, it's a key point. I think we made it many, many times. We are not an exchange. We are a market infrastructure as a service. And therefore, because we are not a licensed institution, we work with a financial institution. Now, the question would be, is that asset issuer a financial institution themselves? Are they using an underwriter, for example? Right? So these are the first questions. Second questions would be, what are the type of assets? Because some assets can be distributed through a syndicate, other assets can be distributed directly to, let's say, a private banking fund. But having said that, the due diligence, so we have a partner, we did a PR, correct me, Connie, because time, I mean, I have no idea when we are, but we did a partnership with Check, with double K, on the KYC. So what we would be using on our platform, not only on the asset issuer, but the investors would be offline process whereby the documents, the data is checked onto that platform. I can go into more detail offline, but it's a very, very robust process. And then what we get the output of that pass, that white label, and then we use it onto our platform in our digital identity.
So maybe to answer in one sentence is, it really depends on the institution that's using CrossPool to run their business. So which rules they have to make assets available, and it will be different depending on the institution. What we do with technology, we allow the flexibility to accommodate different processes.
Yeah. And usually when I say that, you correct me and you go into a long explanation.
Okay,
right.
Let's go to the next question. So the questions might jump a little bit,
That's okay.
but let's make sense out of these. So just now when we go through the processes, we mentioned about escrow. Can you explain a bit more about escrow and maybe touch more upon the settlement processes and payment?
I think that's one for Lawrence, but he covered that in on a high level earlier. Maybe can we pick another topic for now and maybe get back to that, or leave it for another day?
Yeah.
Okay.
What else do we have?
So this platform is using Permissioned DLT. Can you guys talk a bit more about why would you prefer doing this?
Yeah, so maybe I'll start, and I'm sure everybody will jump at me and correct me, but what is very, very important, not only we're talking about capital markets, second, we're talking about private markets, where a level of information asymmetry has to be kept, right? So why we chose Corda, and Corda R3, some of you are online, you chose us, I think it's a relationship that works really, really well, is because of the level of permissioning that we can do. So let me give you an example. Connie and I had a transaction, okay? So the price discovery of that transaction, maybe we don't want to share the quantity, maybe we don't want to share the price, maybe we don't want to share who we are to the network, but maybe we want to share some of these attributes. And the permissioning level help us to do that. So as well, bearing in mind that we are in the private markets, what you have a fair value, you have a market price, and then you have an intrinsic value that maybe is based on emotion, maybe on economy, that between Connie and I, we will meet halfway. So if it's at a very much of a discount of what I bought it for or what Connie bought it for before, we don't want the market to know. As well, we may not want the market to know who we are. We might be a sovereign, we might be a personal person, a politically exposed person, not that we would entertain that, but as an example, a family office. And all the permissioning that are given to us as an ability on the platform, that's some of why we've chosen to maintain that information asymmetry within a network. If you're not part of the network, you won't see the transaction. As well, when Connie and I, so Florian talked about the indication of interest, the RFQ. When Connie and I go into a transaction and there's a bid and offer, no one else sees that. It's a one-to-one encrypted channel, and that's very important to us. Nobody's correcting me. Woo! I passed.
Okay, let's move on to the next question. Would you see this as some kind of general marketplace different institutions can leverage, or rather each institution is hosting their own market? Maybe for you, Florian?
Yeah, that's an excellent question because it goes a bit to the complexity of where do we sit in the market? As Alex already pointed out, we are never the exchange. We're not running things. But it's a very fair question. How would institutions use that? It depends on where we are in how this market evolves. What we do see in our conversations is mostly institutions who already have deal flow, who already have investors on the other hand, and who want to run their business more efficiently first. And then based on that, build new revenue streams, maybe allow a more efficient secondary market in the future to generate new revenue streams. That's the general conversation. Then, of course, very quickly, like whoever asked that question, like who also pointing out, which if I understand it correctly, these institutions, because it all runs on the same infrastructure, could decide, why not connect? And this actually, that was our original idea. That's where the name CrossPool comes from. Why not connect cross assets, cross institutions? I allow my investors to have access to your green bonds, and you allow your green bond investors to have access to my Chinese private equity platform. And then we find a way of figuring that out on the commercial side. So the original idea was always to build capital bridges. Now, again, we know that's going to take time, but from the beginning, technically, we built a platform to accommodate for that. I only mentioned one example why that is important to think about it from the start, and that's identity. So what you could do on a platform like that is that if institution A trusts institution B, it could also accept the KYC that institution B did on its own investors. And then those investors can very easily invest into the assets on institution A or offered by institution A. So we thought about this early on. It will take time. And so the phase that we're in now is literally enabling ongoing institutional businesses in private markets that already have deal flow and investors in their own business.
Okay, so just to announce time, so it's 8 o'clock. Originally, we planned to stop now, but let's take 2 more questions before we close, yeah? So the next question is, I think it's more techy. How is deal data uploaded into the system? Is it manual or by open API?
I can't answer, I'm not the tech guy.
Can Lawrence take this up, please?
Sure. So the deal happens on CrossPool, directly on the website that you see in the demo just now. when you click on sign contract, a deal is made and recorded on the blockchain. So then it to try to kill two birds with one stone, try to answer the question about DVP as well. So after you sign the contract, a delivery versus payment process is initiated, and then we wait for the payment. But in terms of the contract, a deal was made and you agree to pay. Once you've made the payment via either credit card or fiat payment, or in the future we can support stablecoin or any other currency that we integrate, then the system checks the transactions gone through, and then the token will be completed, the transfer, meaning moving the token from the escrow to the buyer automatically on the blockchain. And of course, in the future, we can do this via an API if you're logged in.
Yeah, and so the point that we have no human intervention. So, so risk and control, I'm an ops guy, right? So we don't key in anything, the platform does it. It's all recorded onto a chain. A change is really a change of state. It's a state, and then the change of state. There's no human intervention. That's the beauty about that. Fully compliant with a lot of regulations out there. Connie, another one?
Yes, another one. Okay, do you have European, Swiss, and Chinese data, legal and financial compliance in place? And do you have a cost basis for execution of contracts?
So cost basis, I'm not sure if I fully understand, but I can cover the first part. It goes step by step. And since we sit here in the region and our first clients are from the region, we first implement compatibility with the legal compliance and other requirements here. The client that we mentioned earlier sits in mainland China, is actually a government client, and they have very specific requirements around so which limitations or which exact process steps and restrictions need to be in place. And so you can think about it almost like a toolbox where we build that functionality jurisdiction by jurisdiction and go client by client, and not try to preempt that and build that before we have the clients that develop that together with us. And this is why I'm using the wrong word to start with. Clients are always partners for us, and some of these things are new. And in the projects that we're working on now, we actually define some of these things together. It's our legal counsel, our legal team, working together with legal counsel of our partners to define sometimes what you could probably call also new standards or new best practice. And it's early days. I sit on the FinTech advisory board of the SFC, Securities and Futures Regulator here in Hong Kong. And, the regulators are also, we've seen an acceleration, but the regulators also need to follow along development of technology and what's happening in markets. So it's step by step to build these capabilities for the specific jurisdictions.
And so I'll take the second part of the question, which was cost-basis contract. So I think there might be a misunderstanding about the word contract. So in our world, if it's IT, so when we talk about technology, yes, token is a digital representation of an ownership of something else. We prefer to use the word contract, but it's broad and it's not accurate. So in our world, fee that we would take. And the idea is really for us to be a meta platform of all platforms, to be really within other exchanges. As we said, CrossPool is cross chains, cross protocol, right? And cross assets. So we're already working with other protocol to be interoperable and bridging different worlds, the real assets to the financial world, to the investment world. That's where we come from. We can take it offline if you have questions on really cost, and call me. That's my job.
An additional comment on that programming note, I see there's many questions still, but I suggest, we cover that offline, or maybe even better, we have another webcast when maybe we can also talk about the next tech module going live. We continue to execute. as I said in the very beginning, it's tough times, but we continue to execute, continue to build, and maybe we have something exciting to show. We definitely will. And then we can continue that conversation and maybe reserve even more time for questions.
So I think that's a good point, because look, it's our first webinar. To be honest, we did it coronavirus or not, we would have done it the same way. It's our first one. If you have more questions, reach out to Connie at finfabric.com. She will take the answers. We might publish them onto our website, because we are transparent, we are open. What you see is what you get. We don't hold back. But I think, today it was a real pleasure. We had around 50 to 60 people joining. It's very humbling. And I think, all in all, you have to look after yourself, look after the community wherever you are, support each other. We're trying to do our best, stay safe, stay healthy. It really matters. Thank you.
Thank you. So I think we come to the end of the session, and like Alex said, so this session has actually been live streamed to YouTube, so you can immediately watch the playback already or share with your friends. So I don't need to download, upload, whatever. And thank you for your participation. We have a really high turnout rate. Grateful for that. Let's meet again soon.
Thank you.
Thank you very much, everyone.
Stay strong.
Stay safe. Stay safe. Stay strong.